Something strange is happening. More strange than anything silver investors have seen in decades, more unusual than anything banks expected, and far more serious than what the mainstream financial world is willing to admit. For years, people talked about silver moving in cycles, rising, falling, repeating. But this time, analysts are whispering about something else, something beyond the usual four-stage cycle everyone quotes, something they're calling Stage 5. A phase almost no one believed was possible, a phase that could push silver into numbers that today feel insane, unreachable, impossible, and yet, the deeper you look, the louder the warnings become. Because silver isn't just moving, it's signaling, quietly, violently, and very rapidly. Banks know it, governments know it, industrial giants definitely know it, and they're all acting like something big is coming, something they don't want the public to understand, something they can't control once it begins. And that's why the title of this video is not hype. It's not clickbait. Silver's secret Stage 5 could be the most dramatic price event in modern financial history. And if the early indicators are real, silver's move in 2026 may not be 20%, 50%, or even 100%. The data suggests something far more explosive, something closer to 500%. And the craziest part? It may already be starting. You've probably noticed the unusual silence from major institutions. They speak freely when gold rises. They're loud when stocks fall. They're very vocal when inflation hits. But when silver moves, something shifts. Voices get quieter. Reports get shorter. Forecasts become vague, and banks start adjusting their positions behind the scenes. It's the same pattern that appeared before every major silver jump in the past century. In 1979, in 2011, and now again. Only this time, the numbers are far bigger, the shortages are deeper, and the global demand is rising faster than at any moment in history. Let me show you what I mean. In late 2025, physical silver inventories began shrinking at a speed no model predicted. Vaults that were considered overflowing 2 years earlier suddenly looked thin. Industrial buyers panic ordered more than usual. Solar manufacturers began securing supply months in advance. Battery companies quietly increased long-term contracts. And a handful of very large banks quietly pulled millions of ounces off the open market. No warning, no explanation, no statement, just silent accumulation. And accumulation at this scale almost always means one thing: someone expects something, and whatever they expect it soon. But here's what triggered real alarm among analysts. Silver demand wasn't just rising, it was accelerating exponentially. And supply wasn't just tight, it was breaking. Mine production hit a plateau that experts didn't anticipate. Some of the biggest producers in the world admitted they could not ramp up output fast enough, or quality decreased. Extraction became harder. New mines were not opening fast enough, and older mines were shutting down permanently. In previous silver booms, miners increased supply quickly. This time they can't. Not because they don't want to, but because the geology no longer allows it. Silver is becoming harder to find, harder to extract, and more expensive to pull out of the ground. Now combine that with something even more dangerous: the explosion of global industrial demand. Silver is now essential for solar panels, electric vehicles, medical equipment, AI hardware, defense systems, and nearly every major green technology the world is rushing to build. Every country is fighting over the same supply, and every year the required amount grows. Countries don't only want silver, they need it. And unlike other metals, there is no substitute that can perform its job with the same efficiency. This is where Stage 5 begins. Silver's typical 4-stage cycle includes accumulation, breakout, mania, and collapse. But analysts are beginning to see a 5th stage, a stage created by a perfect storm of industrial demand, shrinking supply, geopolitical tension, and a currency system losing stability. Stage 5 is not just a price rally, it's a structural reset, a moment where physical shortages collide with financial pressure, where paper contracts can no longer control the real market, and where the price stops being influenced by investors and starts being driven by raw survival demand. Imagine a world where solar manufacturers cannot meet deadlines because they don't have enough silver. Imagine EV producers slowing production because their suppliers cannot secure the metal. Imagine military departments bidding against corporations for strategic stockpiles. Imagine banks suddenly unable to deliver physical ounces they promised years ago. This isn't science fiction. It's already happening quietly. Small shortages today, big shortages tomorrow. And total panic when industries realize they cannot function without silver. Stage 5 means the price no longer responds to traders. It responds to desperation. But there's another layer no one talks about, one that almost guarantees explosive upside. For decades, silver was suppressed by massive paper trading. Futures contracts leveraged positions. Derivatives that multiplied supply on paper far beyond what existed in real vaults. That paper market kept silver prices artificially stable, But stability doesn't last forever. When confidence cracks, paper markets collapse fast. And when they collapse, real metal becomes king. Every ounce becomes a weapon, every bar becomes a lifeline, and the price begins reflecting reality, not fiction. This is exactly what happened when analysts noticed a massive mismatch between paper claims and real supply. Claims were enormous, real metal was limited, and once demand began rising faster than inventories, the imbalance became impossible to hide. That's when something unusual happened. Banks began to exit their short positions, slowly, carefully, quietly, the same way they always do when they know a market is about to escape their control. And then came the panic buying, not from retail traders, not from influencers, but from institutions, the most powerful players in the world. These are the same groups that usually ignore silver. But now they were buying, not trading, not speculating, buying and holding. The last time they behaved like this was 2010, and the price doubled within months. But this time, demand is far greater, and supply is far weaker, and industrial pressure is far more intense. Now let's talk about the cracks forming in the currency system. Fiat currencies around the world have been weakening, debt levels are exploding, inflation cycles are repeating faster, and major economies are struggling to maintain stability. When currencies weaken, hard assets rise. But silver doesn't just rise, it overreacts, it always has. Throughout history, silver outpaces gold during monetary stress. And we're entering one of the most unstable global cycles in decades. That instability adds fuel to a fire already burning. Multiple governments have started planning strategic stockpiles of critical minerals. Silver is now on that list for several nations. Think about that. A metal once treated as an investment toy is now being accumulated by governments as a strategic asset. They see what's coming, they see the shortages, they see the industrial demand curve. And they know the world is entering a phase where silver is not optional. It's essential. Now combine all of this: industrial demand exploding, mine supply stagnating, banks accumulating, paper markets cracking, governments stockpiling, and a global monetary system shaking under pressure. This is stage 5, not a rally, not a bubble, a structural event, a supply and demand detonation. In stage 5, price targets stop making sense. Analysts start throwing out numbers that seemed insane just months earlier. That's why some models now project silver reaching levels no one imagined. And the 500% figure for 2026 is not random. It's not fantasy. It is a mathematical possibility based on supply constraints, industrial demand curves, and the velocity of capital entering the sector during crises. Some insiders believe silver could go higher than that if enough pressure builds. But even the conservative projections now look explosive. And this brings us to the biggest question. Who will benefit when stage 5 erupts? Not the banks. They're exiting. Not the governments. They're hoarding. Not the industrial giants. They're scrambling. The ones who benefit are the people who understand cycles before they become headlines. But here's something even more interesting. Analysts discovered a repeating pattern that appears before every major silver breakout. And right now, the exact same pattern is reappearing. Inventories drop, premiums rise, back orders build, banks cover shorts, governments accumulate, investors ignore the signals. Then the breakout begins. Every time, every decade. Same sequence, same warnings. And every time, the people who act early win big, and the people who wait for confirmation miss the move entirely. This is where the story becomes even more incredible. Because as 2026 approaches, multiple catalysts are aligning. Industrial shortages, increased national security demand, expanding renewable energy targets, new AI-dependent manufacturing, declining ore quality, currency instability, geopolitical conflict. Every single one pushes silver upward. Together, they create something unstoppable. Stage 5 is not coming. Stage 5 is here. The signals are everywhere, and the pressure is building. The pressure building under the surface is no longer quiet. It's becoming visible, but only to the people who know where to look. The average person still believes silver is just another metal, a commodity, something boring, something slow, something predictable. But the insiders know better. They've seen what happens when a market reaches its breaking point. They know markets don't rise slowly when supply collapses. They explode. They leap. They gap up in ways that rewrite history. And silver is now entering the exact setup that appears right before something extraordinary happens. For months, a strange type of buying has been occurring. Not retail buying, not speculative hype, but deep, heavy institutional absorption. The kind of buying that never cares about price. The kind of buying done by entities preparing for events long before the public sees the headlines. It started small, then it grew, and now it's accelerating so fast that even some analysts who ignored silver for a decade are quietly updating their models. They won't say it publicly yet. They don't want to be the first ones caught making a bold claim. But behind the scenes, they're telling their clients something very different. something closer to what stage 5 really means. One analyst admitted off record that physical silver may already be in a deficit so large that the market cannot fix it without a major price explosion. Another warned that if industries continue consuming at today's pace, 2026 could become the first modern year where there simply isn't enough silver to meet global demand. Imagine that. A world where industries are fighting for ounces the same way nations fight for oil. If that scenario unfolds, silver's price doesn't just rise, it redefines itself. This is why banks are quietly adjusting their strategies. They are not selling into strength. They are not suppressing the price like they used to. They're exiting positions, accumulating physical, and preparing for volatility. Those moves are signals, powerful signals. Banks never prepare for chaos unless they expect it. And right now, everything about their behavior says they expect something big. But the biggest warning comes from the futures market. The paper market that has controlled the price for decades is starting to malfunction. Contracts are being rolled over at odd rates. Delivery requests are rising, and premiums are beginning to widen. These are early signs of stress. When the paper system becomes unstable, the physical market takes over. And when that happens, prices stop listening to traders and start responding to supply and demand alone. That's when prices can move in ways no chart has ever shown. And then there's the public. The public always wakes up late. First they ignore silver, then they hear whispers, then they see a headline or two, then the price jumps, then everyone starts asking questions, then panic begins. And by the time they start buying, the price is already far above where the insiders entered. That delay is what creates the largest moves, a sudden flood of new buyers entering a market that already has no metal left to give. But stage 5 is not just about buyers. It's about the collapse of something larger, the collapse of the illusion that the world has enough silver. For years, the world believed the supply was endless. Mines would always produce more. Vaults would always be full. Factories would always receive shipments. But now those assumptions are breaking. Because the truth is simple. The world miscalculated. They overestimated supply. They underestimated demand. And now the consequences are arriving faster than anyone expected. You can already see the cracks in industrial sectors. Solar companies are warning of possible delays. Battery producers are paying higher premiums just to secure enough metal. Electronics manufacturers are facing slowdowns because certain components cannot be built without silver. And defense industries, which rely heavily on silver's unique properties, are beginning to lock in multi-year contracts. Each contract pushes silver further away from the open market, and every ounce removed creates more pressure for everyone else. This is how stage 5 turns from a theory into a reality. Industries begin competing with each other instead of waiting for supply to come to them. Governments intervene to secure national interests. Banks adjust positions to avoid getting crushed. Investors rush in once momentum builds. And the price starts behaving like something unrecognizable. But here's where things get even more interesting. Up until now, silver's price movements were always linked to gold. When gold rose, silver followed. When gold fell, silver dropped. But the early signals of stage 5 show silver breaking away. Silver is starting to behave independently. Gold moves slowly, silver jumps violently, gold hesitates, silver surges. That divergence is exactly what happened in every historic silver explosion. It marks the beginning of a moment where silver becomes its own story, its own force, its own storm. And storms always start quietly, a few unusual waves, a strange pull in the air, a pause before the chaos. That's where silver is now, the calm before the acceleration, the buildup before the eruption. Analysts are calling it the compression phase. And the longer a market compresses, the more violent the release becomes. You can already feel the tension, silver hitting resistance levels faster, breaking them quicker, pullbacks becoming smaller, buyers stepping in almost immediately. These are not the patterns of a calm market. These are the early movements of a market preparing for something bigger than a normal rally. And the question everyone refuses to answer publicly is simple. What happens when the world realizes there is no easy way to increase silver supply? What happens when industries cannot scale production? What happens when governments cannot buy what they need? What happens when banks cannot deliver what they promised? What happens when the paper system breaks under pressure and the real metal becomes the only thing that matters? That scenario is the exact definition of a parabolic move. A moment where price action abandons logic. A moment where fear and demand become the fuel. A moment where a metal treated as boring becomes the most talked about asset on the planet. Now look at the numbers. A 500% increase by 2026 sounds extreme. But so did every major silver prediction before the explosion happened. In 1979, no one believed silver could go from a few dollars to nearly $50 until it did. In 2011, no one believed silver could double in months until it did. And now, the setup is not just similar, it's stronger. Demand is higher, supply is weaker, industrial dependency is greater, and global instability is at its peak. You don't get all these variables at the same time by accident. It feels like a coordinated moment, a convergence, a rare alignment that happens maybe once in a generation. And the people who understand that alignment will see opportunities that others won't. But even now, most investors still don't pay attention. They focus on stocks, crypto, real estate, tech companies, whatever trend is loudest. Meanwhile, silver is quietly preparing for a move that could overshadow every other asset class. That's how silver always behaves. Quiet for years, violent in months. And here's the part almost no one knows. Behind closed doors, certain corporations are securing silver at prices far above market rates. They're doing it because they're afraid. Afraid of shortages, afraid of regulation, afraid of supply chain collapse. These companies would never pay premiums unless they believed the situation was becoming dangerous. Their behavior is a warning sign, a very loud one. Then consider the geopolitical landscape. Multiple countries are increasing military spending, conflicts are growing, tensions rising, and wars accelerate technological production. Every modern military device requires silver: missiles, guidance systems, satellites, drones, cyber defense networks. All of it needs silver. And as global tensions escalate, so does demand. Meanwhile, currency markets are becoming unstable. Inflation cycles are unpredictable, debt levels are unsustainable, and central banks are losing control. When fiat currencies weaken, physical assets surge. Silver surges the hardest. Because silver is not just a store of value, it's a tool, a resource, a necessity. That dual identity makes silver explosive during crises. It behaves like gold when people panic, and like oil when industries panic. That combination is deadly for anyone holding short positions, and extremely powerful for anyone holding real ounces. This is the foundation of the 500% projection. Not emotion, not hype, not fantasy. Mathematics, supply, demand, instability, fear, utility. Every variable pushes in the same direction, and not a single variable is easing. All of them are accelerating. The world is not ready for what happens when a metal like silver becomes more than a commodity, when it transforms into a survival asset, when it shifts from optional to mandatory, when the balance between supply and demand snaps so violently that price stops being a number and starts becoming a warning. Silver is approaching that moment, not slowly, not gradually, but rapidly. With every passing month, the pressure tightens, the cracks widen, the signals multiply. And by the time most people notice, the window may already be gone. This is the truth no one wants to admit. Silver has been undervalued for so long that people forgot it could change. They forgot how volatile it can be, how emotional it becomes under stress, how aggressively it reacts to shortages, and how quickly it can erase decades of calm. The belief that silver will always be cheap is the biggest illusion in modern finance. And illusions always shatter when reality arrives. Reality is coming fast. When analysts talk about stage 5, they're not talking about a price rally. They're talking about a structural reset, a moment where every assumption about silver collapses, a moment where old models fail, a moment where the world realizes it miscalculated something critical, a moment where the market becomes untamed. Stage 5 begins when the market realizes that replacement doesn't exist. Silver cannot be swapped out, it cannot be substituted, it cannot be replicated. Its conductivity, reflectivity, antimicrobial properties, and overall versatility make it irreplaceable. And irreplaceable resources behave differently when they run short. They don't correct with slight price movement, they spike, hard, fast, without resistance. This is where silver stands today. Every industry that relies on silver is expanding at the same time. Renewable energy targets are doubling. Electric vehicle production is rising. Semiconductor manufacturing is exploding. AI hardware requires more silver-intensive components. Medical advancements are accelerating. The need for advanced electronics is growing, and all of them require the same finite resource. Now think about this. The world is trying to move toward a fully electrified future. Solar panels everywhere, electric cars everywhere, smart devices everywhere, batteries everywhere, satellites, chips, medical equipment. All of it needs silver. Every global plan, every green transition, every digital advancement depends on it. And yet, no one slowed down long enough to ask the most important question. Do we actually have enough silver for the future we are building? The answer is becoming clearer every day. No, not even close. The world is attempting to construct a 21st century technological foundation with a 20th century belief about resource abundance. And now the bill is coming due. Industries are realizing they underestimated demand by millions of ounces. Governments are realizing they underestimated strategic vulnerability. Investors are realizing they underestimated how fast sentiment can flip. And miners are realizing they cannot increase production, even if prices rise. That's why stage 5 becomes inevitable. It's not driven by speculation, it's driven by structural failure. And structural failures don't correct quietly. Now imagine the next phase. Imagine headlines emerging. Major EV producer faces delays due to silver shortage. Imagine another headline. Government announces emergency stockpile program. Another. Banks unable to meet physical delivery requests. Another. Manufacturers begin bidding war for available ounces. If even two of these headlines appear, the market enters full panic. Because the world has never seen silver shortages on a global industrial scale, investors would rush in, institutions would rush in, hedge funds would rush in, retail would rush in. Everyone would try to grab whatever ounces remain, and the price would react the only way it can under pressure, upward, violently. The move wouldn't be linear, it would be vertical. A 500% move is not shocking under those conditions. It's conservative. Some analysts privately whisper numbers far above that, but even a fraction of that would shake the financial world, because silver is not supposed to behave like that. A commodity exploding that quickly becomes a geopolitical event, something governments must address, something industries must restructure around, something markets must reprice permanently. That's the scale of what Stage 5 represents. But the most interesting part is not the future price. It's the present silence. Why are banks so quiet? Why are governments not warning the public? Why are industries signing long-term contracts instead of trusting the open market? Why are analysts adjusting forecasts behind closed doors? Why do insiders keep accumulating while telling the public to stay calm? Silence is not random. Silence is a strategy. When institutions know something big is coming, they rarely announce it. They prepare quietly. They accumulate quietly. They reposition quietly. And when everything is in place, then the public suddenly hears the news. That moment always arrives too late for most people. But right now, the signals are loud enough for anyone paying attention. Premiums are rising, inventories are shrinking, delivery requests are increasing, back orders are growing, miners are warning about low ore quality, analysts are confused by the supply gap, the futures market is acting unstable, and silver keeps testing higher price levels with increasing aggression. These are not random events, these are pressure points. The same pressure points that appeared before every major silver explosion in history. But this time, the setup is far stronger, and the risks are far larger, because the world is far more dependent on silver than it has ever been, and that dependency cannot be undone. Now think about how markets behave when investors realize an asset is more valuable than previously believed. Gold rises, oil rises, copper rises, but silver reacts differently. Silver doesn't gradually reprice, it snaps upward. Because silver's price has been artificially compressed for decades, and when compression ends, expansion is always violent. This is exactly what's forming now, a spring wound tighter and tighter. Each shortage pulls it further. Each delivery delay pulls it further. Each industrial surge pulls it further. Each geopolitical tension pulls it further. Eventually, something becomes the trigger. And once the spring releases, price action becomes uncontrollable. This is the moment silver investors wait for their entire lives, the moment when fundamentals overpower manipulation, when reality overpowers perception, when physical demand overpowers paper contracts, when the market becomes honest. And honesty will be brutal. At that point, price forecasts become meaningless. Markets stop caring about past highs. Charts stop mattering. Only one thing matters: who has metal and who doesn't. People often ask what will trigger Stage 5 officially. The truth is, Stage 5 doesn't need a single trigger. It needs pressure. Pressure is already here. But if a specific trigger does appear, it could be any of these: a mine shutdown, a major industrial default, a sudden spike in military demand, a geopolitical conflict that disrupts shipping routes, a financial institution unable to deliver metal, a currency crisis that pushes investors into hard assets, a government announcing a national stockpile plan. Any of these could ignite a chain reaction, and the chain reaction could push silver into a price range that today feels unrealistic. Investors in 1979 thought $50 silver was impossible. Investors in 2011 thought $50 silver was impossible again. Now investors think triple-digit silver is impossible. But impossibility is always temporary. Once the world accepts silver's real value, the market will never return to its old price range. It can correct, yes. It can retrace, yes. But the floor will always be higher, because the world will finally understand a truth it ignored for decades. Silver is not just a precious metal. It's a foundational resource for the modern world. And once a resource becomes foundational, it becomes priceless during shortages. This is why the biggest players are quietly positioning themselves now, not after the headlines, not after the breakout, before it, because they know markets reward those who act early and punish those who wait. As 2026 approaches, the tension will only increase, the cracks will widen, the data will become harder to ignore, and the price will begin behaving in ways that confuse traditional analysts. But the people who understand Stage 5 won't be confused. They'll recognize it. They'll know exactly what's happening. They'll see the setup. They'll see the compression. They'll see the acceleration. Because Stage 5 is not a mystery. It is a pattern triggered by scarcity, pressure, urgency, and fear, the perfect storm of factors that create historic moves. and silver is standing at the center of that storm. The market is waking up, the cycle is shifting, the pressure is building, and when it breaks, the world will understand why some analysts believe silver could skyrocket 500% in 2026, not because of hype, not because of speculation, but because the world simply cannot function without it. If silver enters stage 5 fully, history will not repeat. It will rewrite. And the move that follows will be unlike anything the market has seen in decades.